What I'm going to try and do is set a little context, and then I will then sit down with our esteemed panelists to look at the impact of regulations and policy and how we can use policy, the right policies, the right regulations to drive the adoption of payments across Africa. I think generally we're all aware that, or we all know that there is no lack of regulatory or policy ability on the continent. Where we typically struggle on the continent is around regulatory willingness. So the expertise is on the continent, is the will that I think we need to work on to achieve our purposes. Instant payment systems are increasingly becoming ubiquitous on the continent. We've heard about how many countries are at different stages, and ultimately we are going to be on a continent where access is no longer the problem, but adoption by digital financial services providers, adoption by end users, so that we can increase the throughput that goes into the system, we can retain more money in the system, and ultimately close the usage gap. Today in Africa, we have in excess of 400 million adults who are either financially excluded or underserved. We've had a lot in the last day about the progress we've made in terms of the switch from cash to digital. But the reality today on the continent remains that 70% of transactions are still largely cash-based. You know, when you look at Africa, where we did over $1 trillion in mobile money last year, it then tells you how much there is still left to be incorporated digitally. We continue to struggle with scaling of instant payment systems for people to use them to pay bills for utilities. Most of the utility providers on the continent are still by and large have no digital platforms. We have seen some progress in East Africa, in Southern Africa, but there's still a lot of work to do. In terms of adoption, we have seen some outlier stories. We've seen the sort of rapid growth that Nigeria experienced, I think in 2023. Perhaps it was, for want of a better word, organically driven by the cash crunch Nigeria experienced in 2023 when it changed its currency, but we then saw the impact that had on the adoption of digital payments, with transactions growing from about 793 million in 2018 to 11.3 billion by the end of 2024. So you can see that sort of exponential growth. For the panel today, we will be looking at a few factors. We're also going to be looking at the impact of regulation and policy. For instance, when you look at across the continent, as we've seen electronic grow, we've also seen a lot of governments in Africa impose levies and charges for electronic transactions. We're going to talk about that in the course of this morning. We've seen the impact of trust and reliability on payment systems and the adoption. I think about a few weeks ago, it was the end of Ramadan in Tunisia, and in the last week of Ramadan, just before the last weekend, just before the festivities for Eid start, they had a major POS failure. I think it was on a Saturday. So everybody, it was only people with cash who could transact, and you can imagine what this will do for the confidence of people, for reliability, and these are key ingredients to drive adoption and drive throughput. What regulators will be critical to driving adoption? There are loads of regulators. We have ICT regulators, we have central banks, we have data regulators. What roles are there for them to help us drive adoption and throughput? Gender and income disparity remains a key barrier to adoption on the continent. again, what is the role of regulators and policymakers in terms of changing that narrative. So let me say thank you to the panel for making the time. I've tried to set some context for them. And all right, starting from Matthew, I'd just like everybody to very quickly introduce themselves and their organizations, please.
Good morning, everyone. My name is Matteo Rizzi. I'm a senior partner of GFTN, which is a spin-off of the Monetary Authority of Singapore. If anyone is expecting smart tips for regulators, that will not come from me because I don't have a regulatory background, but I have an investor and an entrepreneur's background and an ecosystem builder background. So apologies is from me today will be common sense, as well as, maybe the perspective of the builders, so, and how regulators can respond to them. Glad to be here.
Thank you very much, Matthew. Exactly why we have you on this panel. Thank you. Marcus?
Thank you so much. Good morning to everyone. My name is Marcus Davis. I represent the Central Bank of Liberia. I'm the Deputy Director of within the Payment Systems Department. I'm really excited to be here. And yes, Matthew, definitely going to fill that gap that you mentioned. Hopefully this conversation is useful to everyone in the room. Thank you so much, Wally.
Thank you very much, Marcus. And I share a little bit more context about Marcus. Marcus, like he said, works for the Central Bank of Liberia. He's a regulator, but more importantly, Liberia, I would say, is in the eye of the storm with regard to deploying an IIPS Moja Loop payment system. So he couldn't be here at a better time. Innocent, please.
Thank you, Wale. My name is Innocent Ephraim. I am a managing partner for Inclusive Digital Experts Africa. We are very young in this space. We created a group of expertise that works closely with stakeholders within Africa. We've done a number of learning in understanding how our partners work. We are basically focused on working in East and Southern Africa, collaborating with governments at a local level, but also at regional level, working with regional blocs. The SADC community, EAC, looked at it from a regulatory point of view. It's important to note, I'm also not a regulator, never been. And bringing a context here from work we have done and what we have looked at and how we challenge our own thoughts and beliefs to ensure that the adoption of instant payment system is happening smoothly in our continent. I'm very happy to be here.
Thank you very much, Innocent. And if I may say so, Innocent has been very modest in terms of his experience, in terms of his knowledge and what he brings to the party, and we'll be listening to him in the course of our panel this morning. Let me get things rolling, and perhaps I'm going to ask for you, Marcus, looking at the role of central banks with regard to growing adoption. One of the key things that people talk about is how do we get as many players as possible onboarded onto the systems. In some markets, the regulations are quite, for want of a better word, almost punitive for non-bank players, very difficult to admit everybody. There isn't a level playing field, etc. So, I remember yesterday there was a lot of talk around risk-based regulation and licensing. Perhaps you can share some perspective with us. Thank you.
Thank you so much, Wally. And I thought the conversation would have started this way so that we solve the problem about regulation coming before business. Okay. So from a regulatory perspective, we at our as a central bank mainly from few lenses. So looking at financial stability, you want systems to be available, but you also want them to be secure and something that the market can rely on. Because of that perspective, we tend to issue regulation that would just make our life easy, everybody in the same box, and we're able to check. Fast forward, with instant payment, we're getting to realize as regulators that that doesn't work very well. So currently in Liberia, we have the e-payment regulation. That's just one regulation. And to be an EMI, you have to apply for an e-payment license. To be a PSP, you have to apply for e-payment license. So technically, whether you just want to issue a closed loop wallet, you have to go through a whole process, just as though you were applying to be a PSP. That's the Liberian context. But what we see happening in Ghana, for example, they have a tier system. So what that allows them to do is actually do the licensing such that you are addressing the risk that the applicant is most likely going to introduce into the market. From a regulatory perspective, as a central banker, that is something we're considering. Now, you don't also want to forget about a key consideration, which is regulatory arbitrage. That's a key consideration that led us to even have the model that we have right now in Liberia. But looking at instant payment and how the world is going, I think a risk-based licensing framework is very important. And from a business perspective, we're looking at actually a collaborative approach where you as the applicant and us as a regulator, we sit in the same room and be able to see what the pain points are and design frameworks that will make your life easy. Because we believe that having the systems in the market is as important as people using those systems. And for people to be able to have access to the system, you need players to come in. So creating a tier system would definitely allow that. And the risk-based framework is a very good approach. And from the Central Bank of Liberia, that is something that we're concerned right now.
Thank you very much. Interesting, as we sort of fix the problems around regulation, welcome more players, from an investor's perspective, in terms of investing into a payment system, one thing that is critical is throughput, is transactions. If we don't get enough transactions, that payment system will be compromised from day one. And Matthew, I just want to ask you, I know that some key drivers for consumer uptake, one is recourse, consumer protection. Can you share some light on that for us, please?
So I think that especially consumer protection is not only critical to sort of build up trust in the consumers, but also probably the biggest gap in the ecosystem today. Let me give you a concrete example. And I promise I will not make names, but one of my investments is a startup that allows you to pay charging with my card, with an European wallet. I can pay wallets in a bunch of countries in Africa, 20-something countries. It's a fellow Tanzanian company. You might have heard of them. So, thing is, if I make a payment here in a wallet in Ghana, and that wallet is not habilitated to receive money, my money still got through. And that person is saying, oh, sorry, yes, I have this number, but the wallet is not habilitated. It's not, I haven't awakened the wallet. So the telco operator will still keep the money, and they say, oh, you want the money? Open up a wallet. Is this protecting the consumer? Not really. The system should be able to say that there is no recipient for that transaction and should be immediately bounced. That is one example, okay, of how in terms of, and this doesn't build trust, especially, the transaction was like a very basic, so I don't care that much, but for most people, making a payment wrong is very impactful, on their own life. So that's one example. And the second example is in terms of, There are a number of frauds that non-digital payments are enabling, and frauds are usually smarter than the system itself, right? And how do we natively protect consumers from fraud? Well, for example, by installing or making mandatory a payment details checking system, which is a regulation that has been recently imposed in Europe, for example, where if you get the IBAN wrong, you don't get it through. And there is, but how much of this is collaborative and how much of this is competitive from a regulation standpoint, I think is the key. Now I've put back for a millisecond my 13 years at SWIFT, and some standards, for the instant payment systems infrastructure might be needed, in terms of how you protect the consumer.
Thank you very much, Matteo. Interesting, these issues we see around consumer trust, the concerns are largely the same across the continent. There is no country in Africa that has a monopoly on bad behavior. And you rightly said that, look, the people who instant payments is doing great stuff, but there are also a lot of people who are using it for not so good things. One problem we see across the several markets is that there isn't enough knowledge share among African regulators, African policymakers, African users. And Innocent, I'm going to come to you because I know you've worked across several geographies in Africa in terms of how can we support regulators and policymakers around harmonizing regulations, licensing requirements, compliance, with the ultimate goal of driving interoperability. Over to you.
Thanks, Wale. And I think, Matteo, you mentioned a very important point in terms of, consumer protection. I think what we've learned in East Africa, and I must confess, Tanzania has walked this path the most difficult way. So my little experience working with the mobile money platform, we were 1 year behind Kenya, which means we implemented use cases after Kenya has done it, and we also dealt with fraud issues after Kenya has dealt with it. So every fraud in mobile money that happened in Kenya was transferred across the border. So, and as he said, consumer protection is key. Instant payment systems are one part of a bigger issue here. So there are a number of issues around that when you deal with it at a local level. We need to make sure that consumers are educated. We need to make sure that they are protected. And the role that the regulator plays is most likely what individual players will not be able to do. And for us to be able to move this as a country or as a region or as a continent, we need a lead from you guys to say, all right, guys, these are the rules of the games. We've seen that happening in SADC. We have been involved in initiatives that bring SADC countries together, looking at the policies and consumer protection, cross-border issues at a SADC region. And you would see that they are not only talking about payments, but this is built around the economic and trade within the region, but it's also looking at how do they facilitate the real transactions that are happening in the region. People are actually moving money. People are trading with each other. We've seen that happening in the SADC region. We've seen that happening in East Africa, whereby the MAC has actually mandated that, guys, we need to be able to have an East African strategy on how we would actually enable movement of money across border, because we know that people are trading with each other.
100%. Thank you very much, Innocent. Marcus, let me come to you again. We've heard Innocent talk about and I think Matthew also referred to it, the scammers are much better at transferring knowledge across borders than the policymakers and regulators have over the last few years. Sometimes, again, I say it's not due to lack of knowledge, but regulatory willingness. I don't want to say regulatory capture in some markets where we've seen regulators typically toe a very soft line for operators vis-a-vis the interest of consumers. The position in other parts of the world is very, very consumer protective, consumer friendly. From a regulator's perspective, what more can regulators do to help protect consumers so that we can see more adoption, build trust, build reliability, take into consideration the sophistication and literacy levels on our continent. So I think people need a bit more protection, and we must give them a little more room to make mistakes and still be able to get their money back. Thank you.
Thank you so much, Wally. I think it starts with actually leaving the comfort of our boardrooms and our offices and actually be able to sit in the same room with the operators and really understand the feedback that's coming from the market, okay? Because it's not enough to just issue a consumer protection regulation, for example, and hope that the operators will follow it and consumer will understand it, and then it works. We have to collaborate. It's very important. If there are issues, the operators need to be willing to inform the regulators on what's going on, okay? So I gave you an example. In Liberia, one of the operators had a fraud incident, for instance. There was a scammer who did more like a Ponzi scheme, collected some funds, and then went to the bank and had it liquidated. Now the central bank gets informed at a point where there's agitation in the market. So you go online, you see, people are demonstrating, they're asking for their money, and then you reach out to this operator like, oh yeah, we had this situation. That's not going to help very well. The operators need to be open. The central banker, like myself, we have to step above the table and just meet each other halfway. Because at the end of the day, when you have trust in the products and services that's been provided to the ecosystem, it helps everybody. We achieve our financial stability goal, and you as operator, your bottom line becomes better, and then you can serve them even more. So that collaboration is very important for all the parties. Yeah.
Thank you very much. And, I'm going to stay on this issue of fraud a little bit. I remember reading a report, I think it was authored by the promoters of Tazama, and the impact of fraud, and particularly, the way African women were reacting to being defrauded on electronic transactions. There's a lot of shame. People were ashamed to speak out that they had been defrauded, and for a lot of them, it meant never going back to use the system and going back to cash. So Matthew, I don't know if you'd like to talk to us a little bit, just in terms of what can we do to address, subsets, women, people, things like that, please.
I absolutely love this topic, and sort of retaking what Mark was saying about sitting down with the operators, but also with the clients. So I've been either investing or working or building local initiatives in a number of countries in the continent, and especially in frontiers market, so not the poster childs, if we call them, of innovation of the continent, but in nascent fintech ecosystems, you always have a couple of lenders that are using, is not a scam, but is basically taking advantage of people that doesn't know what they sign, right? So, and I don't know if probably the majority are not women. This is actually a broader sort of tendency, a broad and unfortunate tendency, where is a disguised paid shark loan scheme, where people are so eager to get that money for an unexpected event in their life that they don't realize that they will go 3, 4, 5 times the money they borrow in a couple of months, and then they get their TVCs, they don't understand why. So there is a very delicate line between scam people and taking advantage of their illiteracy, right? And which is why actually connecting to something that Marcus has said before, and I'm going to be a bit provocative. So if the regulator and the central bank would be able to not vet, but at least be able to be the first sort of at the front line of potentially consumer defrauding apps, or startups or application if used wrong, typically any of the lenders. And you know, I think it would be feasible. There are not hundreds of them, right? So it would be interesting to us. But in Liberia, let's say you would have a dozen of them once you have enabled the switch, right? So that would actually play two roles. One, say, wait a second, are you literally asking for 500% interest after 3 months when the guy missed the payment? On one side. And on the other side, make sure, are you guys putting in place the right processes for your clients to learn what is the service that they're doing? Now, I'm not putting everything, I'm not putting all the monkeys in your shoulder, right? But what I'm saying is that there is a role that potentially, you know, could be used through partners, not directly by the regulator, right? That could help a lot.
Thank you very much, Matthew. And I'm going to take that monkey off Marcus's shoulder and put it on Innocence Labs. We've been talking about cross-border. Historically, we've had perhaps a very wrong perception of the amount of cross-border opportunities, cross-border trades. A lot of that data is not captured because a lot of that business is done informally. Innocent, there are a lot of conversations happening on the continent now. The Africa Continental Free Trade Agreement is one area where people are talking about that AfCFTA is going to be a big driver, and it will only work if we've got solid, reliable cross-border payments that will drive things. You want to talk to us a little bit about that?
Yeah, thanks, Wale. So as an organization, we are strong believers that there is a need for a connected thinking, coordinated action when it comes to cross-border. You don't have a successful cross-border if you do not have local trade happening digitally. Now, we've done a bit of our research and studies across the Southern African bloc, which is quite interesting. There's a lot of trade or movement of funds moving within these countries, and none of them is going through the formal channels. Ideally, for you to be able to have a successful cross-border in digital form, you need the first mile and the last mile. And for that to happen, you need the regulator to set the rules of the game so that that transaction is not more expensive than what it is costing the user when they do it in an informal way. Right, so opportunities are there. Africa is actually obviously moving towards that direction. We're seeing different blocks within the continent coming together and saying, okay guys, how do we facilitate cross-border? Not because of any other reason, because our people are already trading with each other. And the way money is being transferred is not in a way that protect that last mile consumer. And as much as from the boardroom perspective, we would look at it, is it large volumes of values, large values of transactions? It also matters to a regulator. It matters to any user who interacts with that platform that he is protected or she is protected. And the trade actually makes sense. Now, it goes beyond just facilitating the payment. There are a lot of other areas that needs to be looked at, different regulators that needs to touch this kind of a transaction, consumer protection and stuff like that. So at a country level, at a regional level, at a continent level, we need to have a dialogue among different regulators, among different countries to say, all right, guys, how do we look at this end to end and make sure that the interconnectivity within the continent happen?
Absolutely. You know, at African Ender, for instance, we see a future where Africa is covered by a mesh of payment systems, starting at a domestic level, growing into a regional, different regional, and ultimately having a Pan-African payment system with redundancy, seamless, affordable transactions. We've also seen that in Europe, for instance, you know, they've got, and they spend some time, and they have a unified payment directive that is working. So it's brought predictability, reliability, uniformity. Marcos, from an African perspective, should we be going in that direction too?
Thank you, Wally. I think that's a very ideal state that we should all strive towards, but there has to be some baby steps. Okay. Yesterday, one of the roundtable conversation, the point was made that instead of asking for a single payment system platform that everybody gets onto as Africa, why don't we make the domestic so well, get the regional so well, and then we can now integrate? I think we can bring that same approach to regulation. The PSD2 is great, it's working in Europe. Bringing that back to Africa, I think there are certain things we need to fix. So for example, I think sometime this year, Rwanda and Ghana, they went into this licensing passporting. That's a fantastic framework. Right. So once you get a PSP license here and you move to Rwanda, there will be certain regulatory requirements to meet, but they wouldn't be as stringent and as detailed as though you have nothing. So I think that's one concept that within a different region, we need to start to think about while we move towards something like the PSD2 they have in Europe.
Excellent. Thank you very much. Again, I say that for us in Africa, it's not the knowledge, it's the willingness. If you look, for instance, at the controversial issue of data roaming, Europe has fixed this, you know. I'm not going to get bill shock when I travel on my plan from the UK and go to Spain. But today on the continent, we've been talking about fixing data roaming forever. It's not happening. It's beginning to happen in small pockets. You see 2-3 countries progressive, you know. So I think, you know, we've still got a long way to go. I'm going to turn to the audience now and ask the audience for questions, comments, observations. Okay, we see a few hands up. Maybe I can start with my brother from AFR, Jean Bosco.
Yes, thank you very much for the very insightful conversation. Well, when I was just hearing from the different panelists, there's this whole problem of adoption. Because really beyond access, we want to see adoption, usage, but also benefits of these payment systems that are put in place. I wanted just to understand from my brother from Liberia. I just wanted to know, do you have, or does the government have an ambition to be cashless or cashlight? If yes, how does the central bank support such an ambition? Because really, when you look at the new mandate of central banks, it's no longer about market supervision and price stability, but more actually is demanded from central banks to support economic development and all those ambitions of cashless, cashlight. I mean, central banks should play a role certainly within their powers and what they can do. And most of the times, based on the free market principles, we apply carrot, not stick strategies. Yet, when you are implementing I would say, public good, deployment, you need actually sometimes to apply also the stick in some occasionally and when it's needed. And I don't see that much across Africa. And I wonder, do really central bank care about these ambitions of being cashless or cashlight? And if there is anyone who is doing it, yes, Carrot, and I share probably an example. 2014, the central bank in Rwanda put in place an interoperability policy, encouraging the private players to interconnect through one platform. 4 years later, no one had done that. Then everyone was complaining, and it's until actually a serious discussion happened to say, really, you need to do this because we are really encouraging you, and we know there's value, but you are not doing it. So it's until actually the stick was brought that people started moving in the right direction. So what are you doing, and what are the other African countries doing around that? Thank you.
Okay, there's another question at the back. So Marcus, please take note of that question. And there's another from the gentleman at the back.
Thank you. Okay. Thank you for the interesting, discussion so far. I just want to react to the statement made by the last speaker regarding central banks supporting development. This is a very, very sensitive area because we have been reminded over and over that the role of the central bank or the mandate of central banks is to try to achieve and maintain stability, price stability, and exchange rate stability. So moving into or venturing into supporting development can be a very sensitive area. And it all depends on, of course, the laws. If the laws governing the central bank mandates the central bank to support development, then you can go ahead. But I know that certain central bank statutes in the sub-region prohibit central banks from venturing into development functions. So this is a role that is very critical. One have to watch it. And then from a sub-regional perspective, maybe if we are to venture into development as central banks, there need to be a harmonized approach. That is trying to make sure that the laws within the sub-region are harmonized so that we can move on a common footing to achieve a situation where central banks can have the mandate to support development. Thank you, sir.
All right, maybe we take those two questions. Okay, one last question.
Oui,
one last one.
Merci, vous proposez que j'aille en français. D'accord. Moi, c'est M. Assis de la Société des Postes du Togo. Dans l'un des panels, il y a un panéliste qui disait qu'en fait, au niveau technique, il y a une certaine facilité d'implémentation. Ok, donc je disais qu'un des panélistes disait entre-temps que l'implémentation technique est facile à mettre en œuvre. Et donc je comprends au cours de ce panel que la volonté des régulateurs, évidemment, c'est qu'on parvienne à terme à connecter l'ensemble des pays pour peu que chacun puisse améliorer un peu la connectivité, le traitement des transactions. Et je suis sûr que lorsque nous quittons le niveau des régulateurs, on va nous parler aussi des politiques qui doivent aussi se décider avant que cette action ne soit effective. Pourquoi ne pas laisser cette discussion entre les acteurs financiers qui se connectent au système, qui savent déjà comment gérer les réclamations, comment traiter même les chargebacks, les réclamations interbancaires, disons, inter-institutions, et de sorte à ce qu'on puisse, disons, accélérer ces décisions pour que l'Afrique se connecte dans un court délai. Parce qu'on a l'impression que le retard, c'est au niveau des régulateurs, et le retard, c'est au niveau des politiques. Alors je propose, bon, ça peut être une question comme une proposition, qu'on descende les débats au niveau des acteurs, qu'on impose peut-être des délais, hein, qu'on puisse remonter les résultats et qu'on puisse parvenir à une interconnexion rapide. Merci.
All right, thank you very much. Marcus, maybe I will let you start.
Okay. I hope the French wasn't for me. Yeah, so to the first question, I think the second one was just in addition to that one. It's about time that we all realize central banks can no longer be as they used to be many years ago. From a regulatory and supervisory perspective, we are now talking about risk-based supervision. Some years back, that wasn't the case. We are talking about a risk-based licensing framework. Few years back, that wasn't the case. So the central bank, we are being progressive, but it's going to come with time. In the context of Liberia, yes, our agenda right now is a cash-light society, because definitely we cannot go cashless now, but the ideal goal is a cashless society. Just last week, we issued a directive. One of the MNOs had a 1% cash out fee for the ecosystem. Another one wasn't happy with that. Their point was, we were charging 3% and you were charging 1%. What you are effectively doing with the 1% is encouraging people to cash out. Ordinarily, as a central bank, we will sit back and watch the market play. But looking at the cost of printing banknotes and the impact cash out is having on the ecosystem, we stepped in. How do we do that? Brought the two parties into the room and said, hey guys, show us the data. On the revenue side, because for every time we cash out, the government generates some revenue. Now, when we look at the data, you see that going 1% is huge revenue loss for central government. So we're like, okay, you have to, meet somewhere. So they both had a conversation, and we agree that we issue a directive for 2%. Now, that 2%, the conversation is happening in the absence of a centralized platform. The moment we go live with a switch, the scheme rules now, we have to consider over and beyond just the data that was shared to make that directive possible. So it's a joining. The central bank is well aware that the market is changing. We also cannot remain the same. We have to change along. But our key mandate is paramount to us, and that's ensuring that the market has a system that's working for them and is secure. So yes, we'll go along with you, but you have to be patient because we are talking about many years of progress. And in most countries, the market is almost always ahead of the central bank, and we are playing catch up. That will be my response to that. And in terms of our intervention in economic growth and development, yes, legally, as a central bank, we have that legal mandate to also help the economy to expand. Our deputy governor is here, and we've done that through different programs. Stimulus packages, giving liquidity to banks that are struggling at different points in time, giving loans to SMEs. So as a central bank of Liberia, we are definitely mandated to be able to have intervention in the market for economic growth. But in terms of the cashless ideal, we'll start with cash light, and then we move to cashless. Thank you.
I think that's a realistic journey based on what we've seen in other markets on the continent. It's a progressive journey. It's a marathon. It's not a sprint. Yeah. Innocent?
Thanks, Wale. I think really appreciate your position, but I also wanted to just share the experience of other countries. I think what Tanzania did at the time was to have a national financial inclusion framework, which is a national coordination body that looked at financial inclusion strategy and journey, led actually by the central bank. But within the National Council, there are different parties that would enable financial inclusion to move on. So guys like National ID, this is whereby the targets were like, we need a digital ID because without digital ID, we cannot drive digital payments. You know, so identification was spoken about there. FIU was part of that. So a lot of other government regulators and bodies are sitting into that council, and the entire country is focusing on driving financial inclusion. Yes, there might be other parties within the government machinery that is driving that, but the regulator in that case drove and spearheaded the direction that the entire country actually took. And from that, we managed to fix the ID story. We managed to fix digitization at a government level. So as much as the government says that we want to go digital, the government of Tanzania said, all right, all collections will go digital. So any payment that the government collects is supported by a digital payment voucher that integrates to any payment system in the country, so they also accept a digital payment. That really helps to drive it.
I think that's a very good example, Innocent, and it's something similar that we also do in Liberia. We have a National Financial Inclusion Strategy. It just ended last year. We saw our number jump from 36% up to 51%. We're going to go into developing a new one. Hopefully, within the next 2 to 3 years, we should have that number anywhere between 80 to 90%. So that's a very good addition to the conversation.
Awesome.
Yeah,
Closing remarks
yeah,
from you?
No, it was actually, again, bringing to a concrete case, but as you mentioned, how you called, in the room, the two MNOs and the sort of, say, guys, show us the data, this sort of dialogue that are initiated by the regulators with the private sector can go really a long way. Think of how the transportation sector, have you ever talked to, first of all, who has ever paid here a Boda driver with a digital transaction? I've never, and I took Bodas in at least 10 countries here. And who has never had a conversation with an Uber driver, Uber, Bolt, call it however, that says, oh, well, I need to put fuel, but if you pay me through the app, I can only see the money tomorrow. So what better than one of these conversations that, yes, enables the instant payment as a gesture, but is not instant because the settlement, that Uber driver, the money only see the day after. That is something that needs an enhanced dialogue. And I think that the whole sector, what I call the embedded inclusive finance, and the transparency is one example. There are many, right? The regulator could have in several ecosystems a much more engaged role. And in this, about the second question that was asked, the cursor between the stability and the development. If you would impose to Uber to say, okay, settlement has to be instant, so the guy has to be able to use the money right now, is ensuring stability or participate to the development? It is actually both.
Absolutely. All right, I think we've come to the end of our time. We're about 3.5 minutes overboard. Closing remark from me is there's a lot of appetite in the room to hear from regulators. I'm going to throw a challenge to Paula and Steve. At the next convening, we would like to also see the possibility of bringing a regional bank CEO and a regional telco to also come and share some perspective. I think that, they need to be part of this conversation. I'm not sure we have any regional bank in the room or any regional telco in the room today. Okay, I see some hands at the back. That's good. So please, we need you to be more vocal. This is your space also. So gentlemen, thank you very, very much for this morning. And thank you for sharing your perspectives. And
Thank you.
Have a wonderful day.